2019. We are TOSindicators.com, home of the Volatility Box. Before I dive into today's report, I'm going to go straight to charts because we just had a news event come out and the markets are moving. So let's take a look just in real time. Just to highlight the news event that I think the market's moving on, it's this guy right here, where we have a news event, or at least a headline, which says that U.S. and China made absolutely no progress on the key trade issues in the 2 days of the negotiations. And so now, if we just come and take a look at the markets to see how they react to this news. So here we have our grid, and you can see that just across the board, we're on the conservative volatility box, and we just blew straight past in almost one go, right across the board in almost all of these tickers. The Dow, especially the most, and it's exactly how you'd expect, right? The Dow is falling, the Nasdaq as well, and then the S&P is kind of following with it, but the Nasdaq has fallen the least out of the three so far. If we adjust the chart for the Russell, we see that's also plummeting. Crude so far contained, but I expect this to break as well. And then we see that bonds have completely broken out to the upside. And so for those of you with the trending bubble label, if you remove our time constraint that we have in there for our volatility box members, you'll see an actual alert pop up here that tells you that this is now a trending market. And it will be confirmed at the end of the hour. Anyways, so we're not trading the after hours activity, but this happened right before we were about to start recording, so I think it's worthy of pointing out. We'll take a look to see what's happened at the end of this video, but maybe cover some more tomorrow. And Volatility Box subscribers, you can take a look on your charts to just see what kind of volatility we have overnight. But I think given the volatility we're seeing right now, we're headed into crazy Thursdays. For our Forex Factory, we're just going to stick with the conservative volatility box, and we'll talk about the events for tomorrow. But yeah, right now we see we're falling. For today, amidst all of this craziness, we had only one trade that set up, and this was in the crude oil market. We talked about how we were using the conservative volatility box for these five tickers actually, all four indices along with the bonds. But then for crude, we talked about playing the inventories report based off of the volatility after 4 a.m. And so today, after 4 a.m., we saw no signs to switch on over to the conservative box. And so we continued to play the inventories report on an aggressive scale. And that gave us the perfect short for the day. Actually, just by a few ticks, we were off by the most perfect entry. And on our two contracts, we had a positive $850. And so that was our only trade for today, but still a nice green trade and a nice follow through with crude today off of that crude inventories report. We'll talk about that as well. Okay, so for tomorrow, we have the following news events that I think we're going to need to pay attention to. And especially with this volatility that we're seeing, I think it'll just be safer to be on the conservative volatility box. It seemed to be the smart idea so far this week. But tomorrow we're looking at the CPI numbers that come out. These are the estimates that you may want to compare against. But so far we've been seeing news events that have essentially started to point us in the direction of the economy starting to stagnate. And so I think almost any number now is being interpreted in that manner. And whenever that news event comes out, and these numbers are being interpreted in the right manner, but the fact that they're being interpreted in a way that the economy is slowing down causes us to fall harder than maybe we otherwise would if, say, these numbers were the exact same. And so I think the conservative volatility box there helps us just better capture this volatility and keep our profits from this week. Thursdays have been known to be a little bit more volatile as of late, and I think this after hours activity is just our sign to be a little more safe than sorry. When in doubt, use the conservative volatility box. All right, and then one more reminder. So we released our free indicator, our latest one, which is a smarter earnings. Unlike most other indicators, it helps you trade the day of earnings. And so we have our first result off of our dashboard and the scans that we've created where we have Delta Airlines reporting earnings tomorrow. And we'll also just cover this real quickly in tonight's recap video, just in case you are looking to play something with options or the stock itself. All right, we'll start with the crude oil market. And so if we draw our entry line, and we had said in yesterday's video to start looking around 4 a.m., right? And so that is right here. And so after 4 a.m., we're checking to see if crude gives us any signs of more volatile behavior. And the way we measure that is are we breaking through these clouds? Are we even touching the edges? And if we are touching what would be our entry line, and in our case, we're asleep at this time, but if we are touching it, are we then bouncing back in the opposite direction, or are we blowing above it, which then tells us that, okay, there is more volatility than expected, and you should switch on over to the conservative box. And so here we saw absolutely none of those signs, and so that was our sign to then continue to use the aggressive volatility box for the actual report. And so the report came out in this candlestick right here, and it was fairly contained volatility, right? We didn't even get close to breaching either side of the aggressive volatility box, and we've seen this happen where it's the post moves that actually give us our entries. And so in today's report, we saw that there was a surprise build, and this to me is just perceived as greater supply. Greater supply typically means that I would expect price to start to go down just off of basic economics. And so the short to me was just one that I was already looking at, but I was prepared to go long or short, right? I'll go whichever way price action tells me to go. It just so happened that we happened to rally right into our aggressive volatility box entry lines. Our entry came right here as we had an opportunity to go short. Our stop was outside of the volatility box. We gave it 30 cents of room. The first contract was hit in this candle right here at 50, actually right here at 53.30, and then our second contract's target was right here at the target line, which was at 55 cents, I believe. And so we hit both our T1 and our T2, which helped us end this day on a winning note. Actually, it was our only trade for the day, but it was nice to see crude pan out, and we've seen these inventory report plays really work out in the recent future. I think one time it's not worked out, but most of the other times we've seen some really nice follow through based off of just what normal common sense logic would tell you about the numbers that came out. Okay, and so let's also wrap this video up by looking at Delta Airlines, something we said we talk about. And so we'll go back to, let's say, a 2-year chart in the case of Delta. All right, and with our 2-year chart, we see that we've had a total of 8 earnings on Delta Airlines. And out of those 8, 6 of them have been gap fills. And of those 6, all 6 of them have been gap up fills where we essentially gapped up and then price came back down and it filled the gap. Right? And so this tells us that there's a recurring pattern 6 out of the last 8 times that has happened. And so to me, that's significant data. And of those 6 times, 4 of them have been on beats and 2 of them have been on misses. And so this tells me that regardless of an earnings beat or miss, Delta Airlines, if we gap up, tends to fill its gap. Right? And I also see that there's been one opportunity in which we gapped and goed, which was a bullish scenario, so where we beat, and this time instead of filling the gap, we continue to go, and in this case, we continue to go for an additional $2.10. And so all this data together tells us that really Delta Airlines has a tendency to gap up and then fill its gap, but if it doesn't gap up, then it tends to trend in the upwards direction for an additional $2.10 before it starts to flatten out, and that's the high of the candle. And so now if we'd like to actually see this on our charts, we can see exactly all of the times. Okay, and so if we zoom in and we take a look at this price, we see that our open was in fact above the previous candle's high. So this was a gap up according to our code's definition. We did fill this gap, but if you took a look at this data based off of this gap up, you can see that we didn't really gap up all that significantly, where this wasn't a trade that I think was worthy of putting, because to fill the gap might have been maybe point some odd percent, maybe 0.2, 0.3. We can even measure it. Right, so that was a 0.22% gap fill. And so to us, that's not really significant. That doesn't give you any kind of edge. But now if we zoom out and we try and take a look at a slightly better example here, which is the most recent earnings, we can see that yes, we did in fact gap up. We gapped up a good percentage, and then we proceeded to fill this gap. And this is the kind of pattern that I'm really looking for. And in this particular case, if we hover over our earnings, our corporate actions, we can see that we had an actual earnings of 2.35 over an estimated of 2.23. And so this was, in fact, a beat, but we still filled the gap. And this is what we're looking for. And so to me, my if this, then that plan for tomorrow is if we gap up in Delta Airlines, I'm going to be taking a look at the actual story, but these numbers come out before market, and as long as there's nothing groundbreaking where we're gapping up, some 9, 10 odd percent, something drastic, I will be looking for Delta Airlines to start to fill that gap and take a look at any signs of a potential reversal if we fill the gap, or signs that we're continuing in the bearish direction to jump on that train and see if we can get this gap fill. But for that to happen, price needs to open above at least the high of this candle, today's candle, which was 54.40. And really, to make it worth our while, it needs to gap up a significant amount above this, but not too significant, essentially, where we have the ability to fill this gap, but say Delta Airlines hasn't opened up where it might have automatically filled this open gap that we have right here, right? At that point, we don't really expect price to reverse and fill this entire gap. That's just unrealistic. And so that's the sort of conditions that we're looking for. And so if we did happen to gap up in that extreme of a fashion, I might be looking more towards the gap and go, or just looking at not participating in Delta Airlines, versus if we gap up 1-2% then filling that gap is something that I see as a completely reasonable scenario. And just to, before we wrap this video up, if we look at that previous gap, just what that fill looked like, this was a fill of 0.96%, right? And so that might give you just a bit better of an idea. And you can obviously go back and repeat this exercise for all of our previous earnings for Delta Airlines. This code is all available for free, but you can take a look and then start to develop your game plan if you'd like to also play Delta after it reports tomorrow in the morning. All right, and if we come back to our grid just to see what kind of action has been taking place, we'll go back to the conservative on crude as well and see if it broke out. But yep, so we see that crude did in fact end up breaking outside of its conservative volatility box like we thought it would. And we also see that prices just continue to drift down lower, right? Since the last time we saw, I think we were somewhere here, and it's now we have this confirmation that the hourly close has happened outside of the conservative volatility box to the downside, and that's where our bearish bias now starts to come in, and we treat this as information, especially during the morning hours. And for those of you who've been tuning into our videos, I think a lot of times the question's been asked as to why we don't take afternoon risk, and sometimes we even take losses over keeping the trade on. It's to avoid these sorts of activities from happening to us, where if you were, say, long and you had just some really bad slippage in place, or if you, say, happen to be a trader who trades without stops, well, this is just not very fun to have to sit through. And so for us, that's why we always say there's afternoon risk involved. Even if you don't see it set up very often, days like today are a reminder that they can happen, and the market's not going to come and tell you or give you sort of a heads up, a pre-invitation that says, hey, you know, we're going to have some volatility in after hours today. It just happens. And these bad news events, if you've noticed, they happen to come out oftentimes after the markets actually close. Once again, to recap, today we had one trade that set up that was in the crude oil market, and that trade worked for both our T1 and our T2 off of the inventories report for a total P&L of positive $850. All right, we hope you all have a wonderful rest of your night. Volatility Buck subscribers, we're working on those scans and sending you that dashboard that we just showed you in which you saw Delta Airlines. So stay tuned for that email. All right, everyone, take care and have a good Thursday. Happy trading. Take care.